Hi and welcome back to Cheeky Crypto. My name is Nick, and today, guys, we're going to be jumping down into the world of Bitcoin, taking a look at what's been going on most recently and what I think is likely to happen next. As I get into today's video, if you do find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, what are you waiting for? Check it out. Link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out? Let's jump right down into today's video. What we'll do is we'll kick things off with the 1 hour time frame. So here's Bitcoin paired up with USDT, and Binance is our data source. So we obviously did have our target range up here between 37,428 to 39,335. This was basically a Z wave pattern after hitting the low that happened to be down here. Let me go ahead and just find that at 35,600. Okay, so you can see that we did tap into this range just here. Okay, we got rejected from there. We fell down in a 3-wave pattern. We moved up in a 3-wave pattern, tapping back up into the range yesterday, and we're starting to fall back down again. You can see that we're just basically dancing around the yellow and red lines here. These are the 50 EMA, that's the red line, and the yellow line is the 50 SMA. So you can see how this was really good areas of support being found, and then we started to really struggle in and around this area right here. So at the moment, the 50 EMA is resistance, and that is basically where we are at the moment on the 1 hour time frame. Now, for this, I think we're still going to be dancing around these EMAs. We are just coming out of the oversold area on the hourly, oversold on the 4 hour and 8 hour timeframes as well. This means that I think we are likely to still try to push up higher into our target range for our Z wave, potentially breaking the existing high that is over here at 37,972. My expectations on the Z wave, although it can be lower than the Y wave high, my expectation is that it should push up higher. So we are still looking for this move upwards. So at the moment, we see a continuation-based pattern. That's what's been going on with these EMAs over here. You can see this kind of continuation, and we should continue when we kind of finish this in the direction that led into it, right? So we pushed up to start with, we continue down, we push back up again. So that's going to be the direction that I'm hoping for here on the hourly. It does kind of make the most amount of sense. If we're kind of semi-lucky for accumulative phasing, then I think we'll pull back to the equilibrium range. But for the most part, my expectation is really that we just have the momentum to shift us back up. We push up back up into the Z wave highs before we kind of then talk about bigger corrections to the downside, because I do think those bigger corrections are likely to occur, and we are likely to see those come to the downside. Okay, so it's just one of those things where you have to be a little bit patient over these different time frames. So on the hourly, everything is kind of moving along quite nicely. From a daily standpoint, we are still finding ourselves inside the 5th wave movement here. So actually, I should say that this is more not of a WXYXZ. This is more diagonal. So I should actually probably change that terminology just a little bit here. 1, 2, 3, 4, 5. That's kind of how it should be. So when we take a look at it on here, we can see that our 5th wave movement is going to be made of 5 waves, and we're still looking for that final 5th wave movement to the upside. Okay, so diagonal in nature, and we're looking to finish this pattern off. Now, we are above, of course, the 50 EMA, that's the red line, 50 SMA yellow line, and the 200 EMA white line. So everything here on the daily time frame is actually looking quite good. There's no reason to kind of be overly too bearish at this point in time, but at some point, I think this is going to change quite rapidly. Okay, so structure-wise, we are kind of looking to finish off where we've kind of been in this pattern here. So it is coming to a close. We can still push up a little bit more, of course, but it does look like it's coming to a close. And of course, these EMAs, we're likely to be testing them, right? So we've got to come down, we've got to test that 50 EMA. Now, at the point of recording, that 50 EMA is 32,189. I still suspect that's going to lift up higher before we retest it. So it's probably going to be around the previous areas of resistance, also its support around 33,000, probably by the time we actually end up testing it. Could be wrong on that, but it's going to be an interesting thing to kind of keep an eye on. 30,900 for your SMA and 28,750 for your 200 EMA. Now, as you can see, momentum here is, well, it's high. It's not overbought, but it can obviously go back up to overbought if we complete that 5th wave movement. And then, of course, will put us more aligned to the weekly and monthly timeframes, which are overbought. Those big macro timeframes are the bearish ones, right? So I've been obviously talking about bearish movements down to $20,000, and I still think that is the case. case, but we have to appreciate that those are going to take months to play out, right? We have all these microstructures, we have all these things going on the hourly, 4-hourly charts. And of course, we have the daily charts, right? Take several weeks to play out. But the monthly is going to take months and months and months of work before you actually start to see it come to fruition, right? And the same with the weekly. It takes months. It takes many, many weeks before you actually start to see the stochastic RSI go from its oversold area to the overbought area to the oversold area. So we have to be a little bit aware of that. Now, if I take a look at it from a weekly standpoint, you can see how aggressively high we are on this overbought range. The last time that we were overbought like this, we did have a correction of 20%. Okay, so just bear that in mind. The time before that, we saw the FTX crash kind of coming in down here, and we saw a 27% drop. The time before that is super bearish, right? We saw a move of 63%. Okay, so just bear in mind that the stochastic RSI isn't really related to price movements in that way. It just shows you that there's now an appetite for reversal in the market. And the last 2 times that we had seen this, or last 3 times that we had seen this, we saw medium kind of level corrections of 20 or so percent. And then, of course, the time before that and the time before that, we saw very, very heavy corrections, right? And so we don't know what's going to happen here in terms of how this correction is going to be. It's either going to be just a quick 20%, or it's potentially going to be a 40 or to 50% correction, which is where I suspect we are likely to be, simply because I do think that we have to move down towards those areas of previous resistance and support, which haven't really been tested since. Let me show you where that sits, right about here at $21,871. You can see here, this was a previous area of support. We've moved up. We have this new area of support on this 200 EMA, but if we lose that 200 EMA, chances are we've got to come down to $21,871. So for the most part, I think, we don't know whether it's going to be a quick 20% correction, which would put us at about $30,000, which is going to be a nice key area for support anyway. But if we were to drop down further than that and lose the 200 EMA, then we're talking about a 40% reduction, which is more in line with what I would expect from a Fed pivot, and what I would expect from some of the bearish economic things happening in the world right now, right? It's really hard to be bullish when the economy isn't in the best position at the moment. So with liquidity drying up, and basically what I'm seeing in the charts is liquidity hunting, then essentially I think, we have got this macro bearish pattern that is going to play out, in my humble opinion. But that's all it is. Let me know what your opinions are in the comments below. Do you think that we're just going to find support at 30K and then just continue to the upside, or do you think a move to 20,000 is the most likely scenario, allowing many profits to get taken off the table, allowing for retail investors to basically succumb to fear, sell their assets to the institutional level investors, all in preparation for a Bitcoin spot ETF and Bitcoin halving? Let me know what your thoughts are on all of that in the comments below. We are, of course, several months out from the halving, and we are, of course, potentially a couple of months out from an approval for the Bitcoin spot ETF, let alone when that will actually get put out there as a product to invest in. Those things are potentially going to be different, right? So we might get an approval in January, but we might not actually see a Bitcoin spot ETF until March. So we've got to bear in mind that it might be a bit of sell the news events and all that kind of stuff. Ultimately, data is the data. I'm not seeing what I want to see in terms of bullish markets. The volumes are quite alarming in themselves as well. So again, not looking at this is Bitstamp data, and you can see how volumes are quite low here on Bitstamp. If we head on over into the Binance data, you can see that also volumes are very, very low. They're very non-existent, right? And so we're not really seeing the kind of volumes behind these things that we would normally expect to see. And so that does give me a little bit of a concern over this idea of pulling back down towards $20,000. But let me know what your guys' thoughts are in the comments down below. I think I'm going to wrap this video up right there. If you have found it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, why not go ahead and subscribe? Tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Until the next one though, guys, have a fantastic day.